What's up, everybody? My name is Radiant. Today, I would like to talk about a stock that I really like. I just invested in Alibaba, and it's actually a big chunk of my portfolio in the stock. And in a few days, we will have the earnings. I believe it was on Wednesday, the week that is coming up. So it's going to be interesting to see what will happen. I just decided to make a video on why I decided to invest in this company and why I believe it's a stock that is really undervalued, even in this market that has gone up like crazy. But nonetheless, the stock has been trashed by everybody, and I will let you know why I bought and what's my thesis behind it and everything. So sit back and enjoy. I would like to start with revenue of the company. Let's just go back to 2010. Alibaba barely made 1 billion in revenue. I mean, it's under 1 billion, so yeah, they weren't even there. 10 years later, Alibaba, like the growth monster that this stock is, has made over $71 billion in revenue. So that's growth of over 71 times over 10-year period. Yeah, but you're saying, okay, right, but right now they have grown so much they cannot possibly continue to grow that fast. It's impossible. And yes, I mean that's normal. Companies pretty much slow down over time, and it's not as fast and whatever, but they still grow pretty fast. Let's just compare the last 5 years, from $12 billion in 2015 to 71 billion in 2020. That's still a lot. That's like a six bagger in the last 5 years. Well, pretty much 6 years if you count it the correct way, as I didn't. But anyway, so as you can see, the stock keeps on growing its revenues pretty fast. Um, Next thing I want to touch on is gross profit. This one is really important. It's the amount of money they get to keep after the product has been manufactured and sold. So let's take a look. In 2010, can you guess what the gross profit was for Alibaba? Well, actually really high, 738 million. And for 2020, this bad boy has been has went up to $32 billion. So even though Alibaba is making 71 billion, gross profit is 32 billion. So that's really high. That's really nice, and that's what you want to see with the stock. So that's another fat check on this company and why it is a very nice stock to be invested to invest in even in these times. Another thing that I normally look at is net income. Let's take a look. In 2010, Alibaba lost money. It lost $117 million. But in 2020, net income is 21 billion. So if you just take a look at these numbers, they're incredible. There is absolutely no reason that this stock will not continue to outperform when it comes to earnings, in my opinion. Net income, it it has exploded over time as the company makes more and more money and tries to reinvest it into different businesses, but they have so much cash now that they can spend it more wisely and not be as cash burning company. So I mean, it's really nice. Alibaba has the potential to be a dividend monster in the future. For those of you who love to invest in dividend stocks, another thing I love to look at when it comes to investing in companies is earnings per share. If we look at it, well, in 2020, obviously they lost money, but in 2020, it's already at 8 dollars the earnings per share. $8 already. The stock uh, is growing faster than its P ratio, which is amazing in itself. You do not get to find many companies, especially in this market, that grow faster. Their percentage of growth is bigger than their P ratio. Another such stock I can think of is Facebook and Amazon right now. So it's not that many that you can find in these times, believe me. Another thing I really love to look at, and it's really important to me, are the total assets compared to total liabilities. So total assets are three times larger, three times bigger, whatever you want to call it, than total liabilities. Total assets are at 185 billion and total liabilities at 62 billion. So there is no danger of going bankrupt or whatever. Long term debt is just 16 billion. That's nothing for a company like that. They can pay it off just in 1 year if they wanted to. So that's not a problem at all. Shareholders' equity obviously has grown tremendously over the past years from almost 4 billion to nowadays $122 billion. Shareholder equity, that's pretty much the money that's left after you remove total liabilities from total assets. And that's money they can use if there are debt problems or whatever, and it's really nice to have. Also, another thing I love to look at is it's the number called retained earnings. Retained earnings, that's pretty much the money that the company can reinvest into itself after everything has been paid, including dividends. So, if we take a look, the earliest statistic for retained earnings is 2012. It was almost 2 billion. And now, in 2020, it's $57 billion. So, Alibaba has reinvested from its earnings in 2020 57 billion back into its business that will keep on growing, that will help for them to keep on growing over 40% a year. Not many companies can do that, and that's why this company is so special. Now, let's move on forward to free cash flow. Free cash flow from 2012 has grown tremendously as well. In 2012, it has been 1 billion and 330 million, and right now it's almost 24 billion. I mean, that's just ridiculous numbers in itself when you look at it. And I believe this is crazy. I mean, you just can't make this stuff up. It's amazing. Other every statistic, every number that you look at is amazing when it comes to this company. Not to mention that recently Charlie Munger bought 20% in. I mean, he used 20% of his funds, of the funds of the Daily Journal, a portfolio he manages, to buy Alibaba stock. That's a big number of shares. Not to mention, he also bought the American version of the shares, which means he isn't afraid that the stock will get delisted from the market. Now, if that doesn't boost your confidence, I really don't know what will. So that's a big, big plus for the company. Some of the most amazing businesses for Alibaba, just to go over them real quickly, are Alibaba.com. That's the main business with which Alibaba got started, selling stuff to Chinese consumers. Alibaba Cloud, that is growing really fast. That's going to be the future of the company. Still very small part of the business, but it's growing at 50% year over year. So that's really, really nice. Another main business segment of the company is AliExpress. That's pretty much selling Chinese stuff to European customers and US customers. I mean, customers that are outside of China, pretty much where your friends get their fake Gucci's and Nikes and whatever. Next one, you have Taobao. That's pretty much the Chinese eBay. And by the way, Taobao completely destroyed eBay in China, so there's no uh, danger of eBay coming over to China to destroy Taobao, as Taobao already made them go away forever in 2006, I believe. Then we have Tmall. Tmall pretty much offers luxurious brands or just pretty normal brands from Europe and the US and whatever for Chinese customers. So that's really nice to have. Their customers can buy cars, clothes, shoes, whatever luxurious they can sell. I mean, I say luxurious because pretty much most of the brands are luxurious from what I have seen, from what I have saw. So yeah, that's just my opinion. Um, and I know there are some fears that the stock might get delisted, might go bankrupt, blah blah blah. Recently, we have had fears that Jack Ma is missing, and I, there were pretty much every media was saying Jack Ma is missing. He hasn't been seen for whatever amount of months. That's really troublesome. Blah blah. But what they forget is that Jack Ma isn't leading the company, and he hasn't led Alibaba for years now. Not only that, he has under 5% uh, ownership of Alibaba. So it really doesn't matter if Jack Ma still wants to have anything to do with Alibaba or not. Let me just put it that way. I'm not really allowed to say the other stuff. On top of that, what I want to say is this stock has been beaten down a lot, and despite its tremendous numbers over the past few years, it still has remained undervalued in my own personal opinion. If this were to be an American company or European company or whatever, it would be valued at least 3 to 4 times its current valuation. It's crazy how underpriced this one is, and if Charlie Munger